Cryptocurrency markets are experiencing a seismic shift as Bitcoin prices surge past $111,000, a milestone that has captured the attention of investors and analysts alike. This remarkable increase coincides with a significant uptick in Bitcoin exchange-traded funds ETFs, further fueling optimism in the digital asset space. As institutional adoption grows, the implications for the broader financial landscape are profound. Bitcoin's recent rally is part of a larger trend that has seen the cryptocurrency market flourish, driven by institutional interest and the gradual approval of Bitcoin ETFs. Market analysts are optimistic about the future, with some suggesting that this price increase could signify a new bull market. "We are witnessing a structural change in how institutions view Bitcoin," remarked a senior analyst at a leading investment firm. The approval of Bitcoin ETFs has opened the floodgates for institutional investment, which was previously a significant barrier. In related news, high-profile figures like former President Donald Trump are also drawing attention to the cryptocurrency space. Recently, Trump hosted a dinner that raised $148 million for a meme coin project, illustrating how mainstream figures are increasingly engaging with cryptocurrency. This event attracted global crypto investors and further highlighted the growing intersection of politics and digital currencies. A spokesperson for Trump's campaign stated, "This dinner not only supports innovation in the cryptocurrency sector but also underscores the importance of a favorable regulatory environment." The technological landscape is evolving as well, with major companies like Apple, Tesla, and Nvidia making strides in the digital assets arena. Reports indicate that these tech giants will start trading shares as digital tokens on the cryptocurrency exchange Kraken, marking a pivotal moment in how traditional equities may be integrated into the blockchain ecosystem. This development could potentially lead to increased liquidity and accessibility for investors, reshaping the market dynamics. However, the cryptocurrency sector is not without its challenges. Recently, Coinbase, one of the largest cryptocurrency exchanges, faced a serious security breach that exposed sensitive customer data. The company disclosed that attackers accessed personal information from less than 1% of its monthly transacting users through bribery of customer service agents in India. This revelation raises concerns about the vulnerability of even established platforms to traditional forms of crime such as bribery. Coinbase Chief Legal Officer Paul Grewal confirmed that the Justice Department is now investigating the incident, although Coinbase itself is not under scrutiny. In response to the breach, Coinbase has implemented measures to enhance its security protocols and has announced a $20 million bounty program for information leading to the arrest of the attackers. CEO Brian Armstrong emphasized the company's commitment to transparency and security, stating, "No, we're not going to pay your ransom." Instead, he expressed confidence in the measures being taken to protect customer data and prevent future incidents. As the cryptocurrency market continues to evolve, the juxtaposition of soaring prices, increasing institutional interest, and security challenges presents a complex landscape for investors. The future of digital assets seems poised for further growth, but it will require vigilant regulatory frameworks and robust security measures to ensure a sustainable environment. With such rapid developments, both market participants and regulators will need to navigate this dynamic space carefully, as the implications for the financial world are profound and far-reaching. In a significant milestone for the cryptocurrency market, Bitcoin has surged past the $111,000 mark for the first time, reflecting a potent combination of regulatory optimism, institutional demand, and the backing of political influencers. This remarkable achievement comes amid a broader rally in the crypto market, with Bitcoin reaching an intraday high of $111,878 before slightly retreating. The surge, which represents a stark increase of approximately 40% since the November presidential election, can be attributed to various factors, including favorable legislative developments and growing investor interest. The recent rally in Bitcoin's price follows the advancement of the Genius Act, a proposed regulation aimed at establishing clearer guidelines for digital currencies. This legislation, which is supported by the Trump administration, seeks to address the burgeoning market for stablecoins, cryptocurrencies pegged to traditional assets like the US dollar. Proponents argue that such regulations could pave the way for greater mainstream adoption of digital currencies, potentially transforming them into viable tools for everyday transactions. Brian Armour, director of Passive Strategies Research at Morningstar, noted that the current price dynamics of Bitcoin are driven by both regulatory developments and concerns over U.S. fiscal policy. "I suspect it's a mix of regulatory adoption and fear for the dollar given the expectation of high government spending," he explained, highlighting the growing unease surrounding inflation and national debt, which some investors see as a catalyst for shifting towards alternative assets like Bitcoin. Bitcoin's ascent coincides with a backdrop of economic uncertainty, including a spike in Treasury yields and concerns over a tax bill projected to add $3.8 trillion to the national debt. The Congressional Budget Office has warned that the policies championed by President Trump could exacerbate existing financial strains, leading some investors to diversify their portfolios. The performance of Bitcoin stands in stark contrast to traditional equity markets. While the S&P 500 has declined by 2% and the tech-heavy Nasdaq by 3% since the election, Bitcoin's growth has positioned it as a beacon of potential amidst market volatility. Moreover, the growing institutional interest in Bitcoin cannot be overlooked. Companies like MicroStrategy have amassed substantial Bitcoin holdings, with reports indicating that they are seeking to raise up to $2.1 billion to purchase more of the cryptocurrency. The influx of capital from institutional players has contributed to a climate of bullish sentiment among traders, further driving up prices. The role of political figures in this cryptocurrency evolution is also significant. President Trump, a vocal advocate for crypto, has made headlines with his initiatives to establish the U.S. as a leader in digital asset strategy and has been actively involved in promoting crypto-related events, including a high-profile dinner for investors in his meme coin. Critics, however, raise concerns about potential conflicts of interest and the implications of such close ties between politics and financial markets. As Bitcoin's price continues to reach new heights, the broader cryptocurrency landscape appears to be experiencing a shift. With a growing number of Bitcoin exchange-traded funds ETFs attracting significant inflows, approximately $4.2 billion in May alone, the appetite for digital assets is palpable. This trend suggests that institutional investors are increasingly viewing Bitcoin not just as a speculative asset but as a legitimate component of diversified investment strategies. Looking ahead, the future of Bitcoin and the broader cryptocurrency market will likely hinge on the outcomes of regulatory discussions and the evolving economic landscape. As the market continues to mature, further developments in legislation and institutional adoption could play pivotal roles in shaping the trajectory of Bitcoin and its counterparts. The increasing acceptance of cryptocurrencies in mainstream finance signals that we may be on the cusp of a transformative era in digital finance, one where cryptocurrencies could become integral to global economic structures. Former President Donald Trump is set to host a controversial dinner tonight at his Trump National Golf Club near Washington, D.C., bringing together 220 of the largest investors in his newly launched Trump meme coin. This event has garnered significant attention not only for its extravagant nature but also for the ethical implications it raises in the intersection of finance and politics. Launched just days before Trump's inauguration, the Trump coin quickly ballooned to a market cap of $27 billion, significantly inflating the value of Trump's personal stake, which is estimated to exceed $20 billion. However, like many meme coins, its value has been highly volatile, peaking at $74 before plummeting only to recover slightly in recent weeks as anticipation for the dinner grew. The speculative nature of such cryptocurrencies, often driven by social media trends and hype rather than tangible value, has led to skepticism among financial experts. Michael Lee, founder of the investment firm Michael Lee Strategy, emphasized that meme coins aren't investments but rather riskier than the dog track, illustrating the inherent dangers of speculative trading. Among the attendees is Justin Sun, a high-profile cryptocurrency entrepreneur and the largest holder of Trump. Sun has previously faced legal troubles with the U.S. Securities and Exchange Commission for alleged market manipulation. His presence at the dinner has raised eyebrows, with critics questioning the ethical ramifications of foreign investors gaining access to a former U.S. president through financial means. The dinner is being framed by some as a means of buying access to Trump, a sentiment echoed by Senator Chris Murphy, who condemned the event as fundamentally corrupt. The White House has attempted to downplay the ethical concerns, with Deputy Press Secretary Anna Kelly asserting that Trump is committed to securing good deals for the American people rather than benefiting personally. However, the optics of such an event, especially with a significant number of foreign investors expected, have led to worries about potential conflicts of interest and national security implications. Norm Eisen, a former ethics advisor to President Obama, described the dinner as the most profound ethics and constitutional emoluments violations in the history of our presidency, warning that it could set a dangerous precedent for foreign influence in U.S. policy. The atmosphere surrounding the dinner is one of tension, with several Democratic lawmakers planning to protest the event, demanding transparency regarding the identities of attendees and the nature of any favors exchanged for their investments. The situation has prompted a broader discussion about the ethical boundaries of political fundraising and the influence of money in politics, especially concerning emerging financial landscapes like cryptocurrency. As the dinner unfolds, it remains to be seen how this event will impact Trump's political capital and the broader cryptocurrency market, which has already seen significant fluctuations during his presidency. With Bitcoin hitting an all-time high of nearly $112,000 earlier today, the relationship between cryptocurrency and political gain is likely to remain a focal point of discussion, raising questions about the future of both the meme coin market and the ethical standards expected of public officials. As the lines blur between finance and governance, the implications of this dinner might echo well beyond tonight's event, potentially shaping the regulatory landscape for cryptocurrencies as Trump continues to navigate his dual roles as a political figure and a cryptocurrency mogul. Ethereum, the world's second-largest cryptocurrency, is making headlines once again as it approaches a crucial price point of $3,000. Recent market movements have reignited interest among investors, with the price of Ether soaring from $1,800 to a noteworthy $2,700 within just a week. This surge not only signals a recovery but also reflects a broader optimism permeating the cryptocurrency market, fueled by significant updates and institutional interest. The recent price rally can be traced back to the successful implementation of the Pectra upgrade, which has enhanced the Ethereum network's functionality. This upgrade has introduced new features including smart account wallets and doubled the capacity for Layer 2 solutions. The result has been a remarkable 52% increase in value over a short span, reawakening investor confidence in Ethereum after a prolonged period of stagnation. As one analyst noted, when the price crosses its realized price, investors begin to feel hopeful again, and that sentiment can be a powerful driver in the crypto space. However, the journey towards the $3,000 mark is fraught with challenges. The $2,800 level presents a critical juncture where an estimated 2.27 million ETH were purchased. Analysts warn that this threshold could trigger a wave of selling if investors attempt to recoup their initial investments, potentially stalling momentum. To sustainably regain a bull market, Ethereum will need to convert this resistance into solid support, cautioned one market strategist, pointing to the importance of volume and institutional backing in this transition. The surge in Ethereum's price has also been supported by a significant influx of capital into Ethereum-based investment products. Recent data indicates that more than $100 million flowed into Ethereum ETFs within just 3 days, a trend that could serve as a stabilizing force against market volatility. Unlike retail investors, ETF holdings tend to accumulate rather than liquidate during minor price fluctuations, altering the supply dynamics in the market. This steady accumulation could be a catalyst for pushing ETH beyond its previous all-time highs. In addition to market dynamics, Ethereum has been celebrating a series of milestones that underscore its growing ecosystem. On the same day as the price surged, the official Ethereum account announced 21 significant achievements within its ecosystem, attributing much of this progress to the Pectra upgrade. These advancements highlight Ethereum's role as a pivotal force in the crypto space, with applications ranging from decentralized finance to improved user experiences through Layer 2 solutions. However, not all narratives surrounding Ethereum are optimistic. A recent incident involving a prominent crypto whale who sold over 2,500 ETH before the rally has drawn attention. The trader's decision to liquidate their holdings at a lower price now appears to have been poorly timed, as they subsequently repurchased a smaller amount of ETH at a significantly higher price, resulting in a loss of approximately $2.67 million. This situation serves as a cautionary tale, emphasizing the need for strategic decision-making in a volatile market. As Ethereum continues to flirt with the $3,000 threshold, the outlook remains cautiously optimistic. While the technical indicators suggest that breaking through the $2,800 resistance could lead to a short squeeze, any significant rejection at this level would likely reignite concerns among investors. The interplay of institutional investment, technological advancements, and market sentiment will shape Ethereum's trajectory in the coming weeks. In conclusion, as Ethereum navigates these critical price points and milestones, all eyes will be on market developments. The ongoing evolution of its ecosystem, coupled with institutional backing, may well determine whether the $3,000 mark is merely a stepping stone or a trap for unwary investors. The coming days will be pivotal as Ethereum seeks to solidify its position in the ever-evolving landscape of cryptocurrency, in a significant move that could reshape the landscape of digital finance. A prominent blockchain technology firm has announced a strategic collaboration with the Solana Foundation. This partnership aims to bridge the gap between public and private blockchain networks, facilitating the integration of regulated financial institutions with the high-performance capabilities of Solana's public mainnet. The collaboration not only marks a pivotal shift for R3 but also signals the growing maturity of both decentralized finance DeFi and traditional finance TradFi ecosystems. R3's alliance with Solana seeks to enable regulated financial institutions to leverage the advantages of public blockchains while maintaining compliance and control over their assets. The partnership will introduce an enterprise-grade permission consensus service on Solana's Layer 1 network, allowing institutions to tokenize real-world assets (RWAs) and access the scale, speed, and liquidity that Solana offers. Lily Liu, president of the Solana Foundation, is set to join R3's board of directors, reinforcing the strategic alignment between the two organizations. The convergence of public and private blockchains is no longer a future promise, it's happening now, said Jens Hochmeister, head of issuer services and new digital markets at Clearstream, a prominent user of R3's Corda platform. This sentiment reflects the industry's recognition of the growing demand for high-quality tokenized assets on public networks, especially as regulatory clarity increases. R3 has established itself as a leader in the RWA sector, boasting over $10 billion in regulated assets on its platforms. This integration with Solana is poised to enhance asset distribution and unlock new settlement options across ecosystems utilizing high-quality stablecoins. Unlike traditional interoperability solutions, the partnership will allow private Corda transactions to be confirmed directly on Solana's mainnet, ensuring compliance while benefiting from the network's robust performance and security. David E. Rutter, CEO of R3, emphasized the importance of this collaboration in adapting to the evolving landscape of digital finance. "We know DeFi isn't coming to TradFi. So it's up to us to build the connective infrastructure that links these two ecosystems," Rutter stated, highlighting the urgency of creating solutions that cater to institutional needs while embracing the potential of public blockchains. The timing of this partnership aligns with a broader trend in the financial industry, where major players are increasingly exploring the tokenization of assets. BlackRock, for instance, has seen significant success with its tokenized money market fund, which has attracted $2.8 billion since the beginning of the year, reflecting a growing appetite for digital securities. The collaboration between R3 and the Solana Foundation is not merely a technical integration, It represents a strategic pivot for R3, which has traditionally focused on permissioned networks. As regulatory frameworks evolve, banks and financial institutions are becoming more comfortable with the idea of utilizing public networks, thereby accelerating the convergence of TradFi and DeFi. As this partnership unfolds, the implications for the future of capital markets could be profound. With R3's extensive network of institutional clients, including major banks and financial market infrastructure providers, the potential to drive institutional adoption of public blockchain technology is significant. In conclusion, the partnership between R3 and Solana marks a watershed moment in the evolution of digital finance, promising to unlock new opportunities for asset tokenization and interoperability. As regulatory landscapes shift and institutional demand for public blockchain solutions grows, this collaboration positions both organizations at the forefront of a transformation that could redefine how financial assets are managed and traded in the digital age. The developments to follow will be closely watched by both industry insiders and investors alike as the narrative of blockchain technology continues to evolve.